Yeah, so Suzi, you mentioned obviously the fact that we are in London today, but of course these changes, these societal changes that we're going to be, or we are seeing and living through, are impacting not just on every other major city in the UK and larger towns, but also globally. This is not just a UK phenomenon in terms of what's happening with commercial real estate and the need to repurpose these very large buildings. It's certainly in London, Manchester, Birmingham, etc., etc.
Yeah, that's right. So it's interesting. A lot of the major funds are now looking to invest outside of London in kind of prime regional offices.
Yes.
So they're doing quite well. But it's all the stock below that
yes.
that's not. So yeah, absolutely. And just basically, there's a lot of product, whether it's office or retail, in our town centres that's just redundant. And so obviously the government's encouraged development through permitted development rights. They've just consulting on a whole range of other permitted development rights.
Yes,
a couple got announced in the budget yesterday.
Yes, that's right. Yes.
And you know, they're really trying to encourage the town centres and city centres to be revitalised. But the fact is, it's just supply versus demand, and that's what runs the commercial property market.
Yes,
and any housing or commercial market is supply versus demand. And obviously, is it a tenant's market or a landlord's market? Personally, I think there's solutions out there that we haven't even thought of yet. So, for example, logistics moving into town centres, which will mean that, you know, the cheapest part of the most expensive part of the supply chain, which is the kind of last mile delivery, could be supplemented by kind of click and collect.
And we're seeing that evolve anyway, aren't we?
Yeah, exactly, and bringing in a whole range of uses. And then, of course, you've got the market. You've got the whole market factor that the market's in a downward cycle. You know, it's 2008 feels a long time away, and you know, Liz Truss didn't really help matters.
No.
Interest rates have risen, and bond yields have risen, which means that, you know, would you rather buy a risk-free bond yield at 5%, or would you rather buy prime commercial property?
Yes.
You're probably going to go for the risk-free rate if you're an investor. So that's just meant that prices are moving.
So yields
out.
are going outwards, yes.
Yeah,
of course they are.
Absolutely. So obviously that doesn't help development. That doesn't help repurposing. And so, you know, okay, there's problems, but there's so many opportunities for commercial investors.
Yeah, and it's being able to see, as we said earlier, you know, and we were talking earlier, that, you know, being able to see ahead of the curve, being able to see beyond the fog, and have a clear vision of what you think and the people that you're working with, developers, investors, what's going to work in the future 5-10 years downstream.
Exactly, and I genuinely think you have to start thinking in those kind of timeframes with commercial real estate, because socioeconomic factors both nationwide and globally are changing at such a rate of knots. I mean, we've got technology potentially taking people's jobs. You know, that's another thing to throw into the mix. And so you definitely need to have a longer term view, and there will be big failures, there will be big problems, and this is where niching comes in. This is where, if you can niche your real estate strategies and actually niche in those sectors that are growing, they cater to longer term trends, that's where you're going to tick the boxes and make the money, basically.
Great. Well, that's what a lot of people listening to this will be fixed very clearly on where they can make their money, where they can invest their money if they're an investor rather than developer, a portfolio landlord. That's where their focus is going to be, that's for sure.
Yeah.